To start. Just our opening page is called Running a Business. Just want to give you a little insight when you start thinking about having a business or running a business. And, it's, I go back to my original profession when I was a doctor, went to medical school and had a residency. It's interesting. I'm going to read something out of the MREA. Hold on one second. Because this applies to any business. It's not just real estate. And I've told people you can read this book and not be a realtor and still gain a lot of knowledge of how to run a business. So what it says on page 40, if you have yours available, he says you can have a doctorate in real estate, outfox a professional litigator in a contract negotiation, appraise property better than anyone in your market, and have more financing knowledge packed in your head than a mortgage guru, and won't do a lick of good without clients. Isn't that true? To succeed in real estate, you must have client leads. And that's what creates your whole business. So let's move on to the topics. We have to have leads, you have to have clients. And as a doctor, I had to have patients, right? It's all the same. We have two businesses, what your actual profession is. And actually, you have to generate leads, clients, patients, whatever your business is, and you won't survive without your customers. So just a kind of an overview, business habits, setting business and profit goals. We have some strategic marketing. We do have a handout. If anyone would like one, I can also get that for you later. Talk about taxes because nobody likes it, but ultimately you have to pay the piper when you make money. And actually, the better you do, the more tax you pay, unfortunately. So we've been through that before. Profit and loss statements, we'll look at those. Taxes again, and your expenses, which you need to control. And actually, we get to a point where you may have to leverage your business and what you're doing if you continue to grow. So we're going to talk about that also. One second. So we talk about listings and lead generation. I have one more thing I want to read to you on page 41. And Gary says, the listings are high leverage, maximum earning opportunity in our industry. Conventionally, your income from having a listing sell is no different than closing on a similar priced home for a buyer. What separates the two is the amount of time necessary to work them. So keep that in mind when you're thinking about buyers or listings. We're going to talk about what do you think is probably the best way to go as far as your business. And I think Donna knows that listings are really the way to go, but we'll talk about this as we move on. And here we go. Your main job is lead generation. And how do you lead generate? Well, I think your most important thing is creating a database. So if you're new, of course, you have to have your customers or clients. How do you get that database going? I do suggest you also when you do this, start with your command and get it in there right away. Excuse me, and start your database that way. Donna and I have probably over 2,000 right now, but we've been building it Donna's been in it for 30 years. So we've built that. People come and go. They move out of town. So you're always changing. You have to update that. We probably do it at least weekly, if not more. So we're always checking that. There's also a nice little triangle that they have in the book. Actually, at the bottom is leads. The left side is listings, and the right side is leveraging. So if you would open up your book, if you have it, what we're going to look at is we're going to start off with, let's go right to business habits, but that's actually where we're going to base most of our talk about is you have to get leads. Listings are the best, and then maybe leverage at the end. If you actually do well at the leads and listings, leverage is like a normal consequence of all the good work that you've done. So, of course, it's good to have goals. We've actually had goals throughout the years. I have to admit that real estate fluctuates so much. It's very difficult Some years you set your goals, you hit them or you surpass it. So then your next year you think, well, we made it last year. We're going to set those goals. Well, something happens, so maybe you don't make it, or again, you go way over. So it's one of those businesses that's really tough, I think, to set a goal, other than we try to be fairly conservative, and we would usually have, like, we like to sell at least 2 a month and maybe get 2 listings a month. And by doing that, you're probably going to get a fairly good GCR, gross commission income, that you can live with. If you want to do more, of course, that's what you can do that. We opted not to go any further and go up to different levels. We decided to stay with our team, and that's kind of how we run our business. That was a personal choice, not to create, a large team and move forward. It's also important, to account for your expenses. What's the cost of doing business? And of course, we're back to taxes, but you have to have a marketing plan. I brought one with me. I'm not going to read it. If you would like to see it, part of it is being consistent. So when we go on a listing appointment, our plan, we devised a plan for that home, depending where it is. There's a lot of little things that go into it, what we decide to do. But let me show you real quick. So we have the 3-page report. Starts off with, we're going to take photos, how we enter the data into the MLS. Of course, signs are really important, even though some people don't think that's a big deal, but still a lot of people drive by and see your sign and, call you on that. Along with that, we do box flyers. Of course, they can take the flyers and that kind of thing. So this is all part of the plan. And if you like one, you can get a hold of me or Donna, and I'm happy to drop it in your box.
So is that like a checklist that you use each time? You do all that stuff each time?
Well, we do. We sit down and we look at, when we go on a listing, we look at these 3-page, we have it all. So we go through and we'll actually decide which ones we're going to do. Honestly, if we go into a listing appointment for a luxury home, we do things a little differently. You really got to spend a little more on your marketing than if you go into something a little less expensive. Not that they don't all deserve it, because to everybody, it's probably the #1 investment. It's just when it comes to marketing and the money you're going to spend, because you're supposed to keep track of your expenses. That's how we go about looking at that. So, but it is kind of a checklist, actually. So of course, the MRE has an economic model. So if you're thinking about your expenses and how to do it, this is kind of a rough estimate of like if you have gross commission income. Of course, when you get your commission, that's 100%. And according to the MRE, cost of doing sales is about 30%. Operating expenses, that is your marketing, your advertising, your pens, your pencils, and all that, about 30%. So your net profit is going to be about 40%. Breaking it down with a $10,000 commission at the bottom of the screen, about the same thing. So it'd be 10,000, 3,000, 3,000, 4,000 profit. That fluctuates. That's an estimate if you want to kind of gauge it to that. Cost of sales actually has to do more with if you have other people working for you, if you're paying a commission to them also, which you would be, or if a buyer's agent, they're going to get their commission or their salary also. That's more your cost of sales there. Operating expenses are just what it takes, again, to run your business. So
that's on page 179, I believe, in MREA.
yep, that talks about that. So we're going to get into that a little bit more also, expenses. Sure. So if you want to be a millionaire real estate agent, how do you get there? That's a good question. If you want to net $1 million eventually, that would be, after all the expenses, you can actually use this model here to actually go in reverse. So, but what it's saying, if you want to do that, then your operating expenses are 30%, your cost of sales is 30. That'll put you up to about 2.5 million gross GCI, your gross commission income, after that. So you base it on an average commission, which would be, they're saying here, 7,150, 350 units sold. So how do you get to that? If you go to the sell side and the buy side, it tells you how many appointments you're going to need to get to that. So if you go all the way to the bottom on the sell side, you're going to need 333 appointments at least to get back to your million. Or on the buy side, it's 357 because it takes a little more with the buyers that you get to that point. So there's a lot of work there, but it doesn't have to be a million. What if you want to do 100,000? The formula still applies. You can well work it back according to what you think your commission is going to be, and then get back to, say, for 100,000, I need X amount of appointments. Could be more like 40 or 50 at that point. And then work your numbers back. So it gives you a plan, and also you can set your goals, how many appointments you're going to need. So if you're looking at middle of April and you've got 3 appointments, you need to bump up your activity a little bit. So you have to keep going and be consistent when you're doing these things. Okay, taxes and your this is probably the most what people don't even want to get into, but your taxes. A couple things about taxes. One is that once you get started, and it's usually rather difficult, you do want to start thinking about putting money away for taxes. I know the MREA talks about leaving about 30 to 35%. The reality is most people probably can't take a third of a check because they want to pay, food, the rental or the mortgage and that kind of thing, car payment, and you may not make it. But if you could put 20 to 25%, might make it more realistic as you do your business. The reason being, and many of you probably already know, that if you don't, one, if because you're a business, you may get penalized because you didn't make quarterly deposits. Number two, when you take your stuff to your information to the accountant and you get your tax bill, that's a big chunk. So now you have a $8,000, $10,000, $15,000 tax bill you got to come up with. Much easier to pay every quarter, spread that out, maybe have a little bit, either, you get back maybe, or you're just going to not have too much to pay. But, it's certainly a big issue and probably affects everybody's home and income if they don't take care of that.
Do you guys have a separate account for your real estate, or do you put your real estate commissions in with your personal accounts?
We do kind of get to that, but we do separate it. So we have a credit card we use just for business.
Yeah.
So we kind of keep that separate, even though once in a while, there's a little crossover. And then we do put it in the one main account. Donna has her own account for more personal things.
Okay.
So we separate all that out. We could get into whether you want to do an LLC or a sub-S corporation type thing. I'm not going to get into too much detail with that because I'm not an accountant or attorney, and everybody's different. There was a time when I actually did sub-S when I was in practice, and it was pretty nice because you actually just took a draw so much per month, and it did save you on taxes overall. What you didn't save is because now there's more paperwork and things to do. Your accountant made out a lot better because they charged you more. So when you have employees, you've got all those quarterly things to pay, and you have to take that into account. So it's not just personal taxes. As you move up or you leverage and you have more people, you're going to have to take that into account. And that's a whole different story on that. So I won't get into that. It would take a little bit too long, but we've kind of been there, done that with employees and benefits and healthcare. And at that point, it was like, well, as we went into real estate, we decided I didn't want to do that anymore. So that's why we have a team of 2, going forward. I also have actually just a personal expense account that we use for real estate, because what we do is we break it down into categories. So when you enter this into a program, we have like a QuickBooks. As you enter this weekly and pay your bills, we categorize it into certain things. Advertising is probably our number one. So our marketing, there's another slide. We'll talk about some of the lower cost ways to market. But as we move along, our marketing got a little more expensive. We decided to do a few more things and diversify a little bit more and try to get into different areas. Lead generating is what we're doing. Sometimes you get stuck in this little rut, and we decided to move on. So you kind of work in some other areas. It takes a little money to do that. So let's see. So if you wanted to see that, we could do that. There's also an example in the handout. It shows what the expenses are. And there it is on the screen. All these figures are probably gonna be a little bit different. Our accounting fees aren't that much. It's at 2,500. Our advertising was a lot more than this. Let's see. Depreciation, I leave that up to my accountant. So, so those are gonna vary. But, you know, they also have a percentage. We ended up about 2 years ago, we're still kind of working on last year, but about almost 20% of our GCI went to real estate expenses. So we'll talk a little bit more about how to do that because it was 20,
20%.
almost 20, 19.2 or so.
So that's really good.
That was pretty good. Yep.
Yeah. Do you use the profit and loss schedule that they provide, or do you have your own, do you use an app, or how do you track all that stuff? Or know what category those receipts go in?
That's good. It's a good question because how you track here is basically we use QuickBooks. We use that for and creates our, what's nice about that is, you know, at the end of the year, when we're done, you can actually create a report. It takes about a minute because if you've done this for the whole year, you get to the, you know, it's done. So what you can do, and actually there's another page in the handout, talks about different things you can actually deduct. So you end up spending, when you go somewhere, like even coming here to give this, you know, the mileage, you know, you probably take a deduction, you know, because now it's business. You're coming here to do, you know, to teach or whatever. And we use that. So it's another, we do have an app like for mileage. It's called Mile IQ. There are others out there and they'll actually track it for you. So every month you can get a report, you print that out and it'll say, here's what you did for business. Here's what you did for personal. And which is beautiful because then you, at the end of the year, you can also hand that, you know, to your accountant rather than trying to figure it out later. And it does it for you because, you know, years ago it was real common. We would write it down at the bottom of a page. At the end of the day, like, okay, we have 27 miles on Monday. We wrote it down. Well, we did 35 Tuesday, Wednesday, we were out playing around. Thursday, we got 52. So now instead of trying to add all that up, it just does it for you. So there is an app for that. But I do recommend having a program like QuickBooks or whatever you get to create a profit and loss, because at the end of the year, it breaks it all down. Pretty much what you're going to see here, but it also does all your personal expenses and income, where it's going. You can track your commissions, also what you're getting here. Any kind of other fees that you're getting from any of the passive income, we call it, that we're getting from profit share and that kind of thing. So that's the way to do it, than to hand it to your accountant in a box. And then it's going to charge you a lot more because all the time he takes. You want to be able, plus you want to monitor that. I look at it at least once a month, if not every week. We'll take a quick look. Quarterly is good also if you want to, just to see where you're at. That determines kind of like what kind of withholdings you should have had for taxes. So we do that also. Even though sometimes you undershoot or overshoot, and we've been there, done that. So, you know,
Yeah.
but you have to have a goal and then try to figure it out. It's not like you have a fixed income and you always know every week or 2 weeks you're getting that. It's, you know, it makes it a real challenge to keep track. Matter of fact, here's the I was talking about our income statement. We had like 14,000 in advertising costs, and then it breaks it down right to the very end. The reason I bring this up is that if you want to see the categories, you have to set your categories up in the program that you want to deduct. So it's not like all there. So if you start a program, you have to have these in there. So you can, when you make it a payment or whatever it is, or pay your credit card, you could list it under business meals, your cell phones that you use, the dues that you pay, which, you know, the MLS and all the other dues we get hit with. Any educational expenses are deductible. So you go to a seminar, let's see, we go to New Orleans and go to the family reunion, that's deductible. So usually what's nice, if you pick a place that you want to go to anyway, you kind of kill two birds with one stone. So that should be a deduction for you also.
Yeah.
I'm just gonna say, I'm not an accountant. I don't want you to come back and say your accountant said you can't deduct something because Dave said so. But there's certainly a lot of things you can deduct legally because you can and you should. It's part of your business. You're an independent contractor. And part of this is letting you know that it is a business. It's not a hobby, unless you want to make it a hobby. But for most of us, it's a business like any other. So you need to keep track of all that. Yeah.
There's a really detailed profit and loss schedule in MRE on page 349 in the back of the book. Is that what it is?
This is ours, actually.
Oh, okay, gotcha. Yeah. Oh, that's, thank you.
And along with that, when they talk about cutting expenses, if you have to spend, I think we're in a time, you probably should actually look at that. When, if you read the MRE again, he talks about doing, red light, green light to watch your expenses. And I think most of us should be in the red light category, and that we should probably be watching to keep our expenses down in case, the market drops a little bit. I know it's been crazy for a year and a half, but we may get some adjustments here because of the rates going up. The average median price of a home probably went over 400,000 at this point. People are getting knocked out of the market, and we've had people already tell us they're not going to do it in this market. It's too expensive. We're not going to, either try to buy something or sell because there's nowhere to go.
What does that really mean? Red light, green light, play red light, green light for the people that haven't read MREA?
Yep. Well, when it's red light, that means it's time to stop spending above what you should, maybe cut your expenses. So you're stopping any extraneous things, except if you read the book, the advice is cut your expenses, not in lead generation. You still need to do the stuff that makes you money. But if you have some advertising you're doing in a local newspaper, wherever you want to put it, that maybe it's time to look at that and say, maybe it's time to kind of cut that for now, but continue lead generation. If it's a matter of just picking up the phone, that's free. You can do that. The green light is when things are going real well, like they were the last couple of years, you can do some extra things, do your marketing, help your lead generation, go on a vacation. But that means you've got the money and you should lead with revenue so that you don't have a whole big bill. Sometimes it's hard when you start a business. You have to use your credit card to get things rolling as you have a little money behind you. So it's a little bit backwards, but most people do that just because you have to get started somehow. But you try to lead with revenue. So if we have the revenue, not to say, okay, we've had a great month. Now, what we wanted to do is advertise in this market or this farm because we're trying to gain some more leads or clients. And so we'll spend the money on that marketing. So it means, go ahead and spend it. If you got it, lead with the revenue. If you don't, you put on the red light, you stop, continue to work, but just watch your expenses, which goes back to your profit and loss, which means you should watch where you're spending, which means you do that every week when you pay your bills and see where it's going. So that's kind of what that means. It's good. It's a good way to look at it. It's just, and I'll tell her that once in a while, Donna, I'll go, I think it's time for a red light. I've been looking at the numbers. Last month wasn't so hot. I think we're going to cut that few things out there. We're not going to dinner next week. So I just still use it after all these years. So it seems, kind of reminds me to do that stuff.
It keeps you honest with where you're spending your money. Are you getting a return on that investment?
Yes.
Especially in marketing, right? You lead gen, you got to be consistent. So you got to stay with something for a while before you can expect to see a return on it sometimes. Yeah. How long? Year or two? 2 years maybe?
Yep, that's the truth. So on the, we were talking about business write-offs. Here's a lot of things you can write off. Again, I kind of highlighted advertising because that seems to be our number one where we spend most of our money. Marketing, if you want to call it marketing, that's okay. Advertising. I did have a couple areas I thought I have some handouts for that if you'd like them. Like for auto expenses, there's a couple of ways, of course, you take that. A lot of people just take the standard deduction. It's now 20, this year it's going to be 58.5 cents per mile for deductions for that. Or you can actually have your accountant do the actual expenses, and then you can take percent of the car repairs and your payments and all that. If you look at either way, it seems the mileage deductions gets pretty close to actually trying to write off all the different expenses on auto expenses. The IRS, which maybe it's something good they've done, kind of calculates the miles that you get cost per mile by figuring your gas, which of course that's going to change, and the cost to run a vehicle. So they kind of work that into that. So they almost the same thing. If you're leasing, you're probably going to want to just take the mileage. If you own your car, you might be able to expense it out. I did talk to your accountant and see what's best for you on that. But I did print a couple things from the IRS if somebody wants that. The other thing I'm looking at, and sometimes people forget, especially the last 2 years, is to take a home office deduction because most of us were working out of the house probably 95% of the time. And of course, there's some stipulations with the IRS on that. You may want to check again with your accountant. But we actually take that at ours because we're a little bit farther away in Chesterland versus Solon. So we actually do quite a bit. And we've had clients even recently come over to the house, go into our office, we sit down, write up an offer or go over the, whatever we need to do, some of the paperwork. So they are actually in the house, in our office. So we have proof for the IRS that we actually are working out of that. There are a couple of different ways, like cars, you can take a standard deduction. I think it's $5 a square foot up to maybe $300, which isn't much. You could also, which is what we do, or my accountant does for us, take a percentage of the house that you use for business. So you can take the square footage of your office and the areas you use, and also include some of the things it takes to run an office, and use that as your deduction, but the accountant can help you with that. But I want you to be aware of it. If you're working on a house and you're looking for some more deductions, you might want to talk to your accountant about that. And I have a handout if you, I'll leave some handouts here if you want to pick them up. Yep, they're actually right here. Other things to consider, I mentioned that before, whether you want to create an LLC, a sub-S corp, that's really up to you. There are advantages and disadvantages to both. There is some protection legally if you do an LLC, especially if you do a sub-S corp, because it kind of isolates you as the owner from any of the issues that might come up with the business. So you can also talk to your attorney on that too, to determine you want the liability of all that. We talked a little bit about the business accounts. We do have separate accounts, separate credit cards. So it's easier to track what we're doing. It's what business versus personal, and keep track of that way. Paying yourself, salary budget, that has to go with whether you're sub-S or your LLC or just personal. It's just you, or if you have a team. Donna gives me an allowance every week of like $5. So that's part of our budget. She's generous. I think she just raised it. So yeah, I'm asking for a raise. I thought maybe 7 would be good. Any questions about businesses or anything?
The sub S and LLC thing kind of confuses me a little bit.
I think most people.
Yeah.
So the sub S is pretty nice if you want to set that up. We thought about it many times throughout our real estate career. And I guess for whatever reason, talking to our accountant or mostly maybe an attorney, was just, we thought we're still going to get most of the deductions that we're going to get anyway.
Yeah.
At that point, just keep track of your income.
Yeah.
And pay your quarterly taxes, and it's you're going to be okay.
I think my accountant told me that as long as, if you're an independent agent, you're probably okay with an LLC. But then if you hire somebody, then you might want to consider a different category.
Well, yeah, as you get into the leverage thing and all the different layers, you start getting employees, you're probably going to want to insulate yourself more, the company, from your stuff personally. So then you can go into a LLC or corporate type structure, something different.
Insulate from liability.
Liability.
Yeah. Okay.
Yep. That's really what it comes back down to, the liability. So.
Sure.
As we move on, so I'm talking about marketing strategy, but what's the big four? So the big four is, and again, there's a triangle in the book, but we had talked about leads, listings, and leveraging. On the inside of that becomes you think like a millionaire, you earn like a millionaire, you net, and then you receive like a millionaire, if that's what the direction you want to go. And those are what to talk about, the big four. So you want to create a plan, especially when you're starting out with your new business, like what you plan to, how do you plan to run this business and get it started? Some of the bigger teams will meet regularly and talk about with the employees what the plan is and how they're going to go about marketing and doing their business. So it's important to have a plan made up. We talked about some marketing. Now, as you start out, we mentioned some of the things you can do for low-cost marketing to help you get started. That's actually pretty much almost free. I think, again, I'm referring back to going into your command that we have available through KW, which is basically free. And as you build your database, there's certain ways you can actually do marketing without spending a lot of money. And one of them that we do, and we've done because we like to be consistent, is we actually make sure we send our clients an anniversary just a note card as they come up. So every couple of weeks, we'll go in and it automatically populates that for you in command. It tells you these birthdays are due. So it takes care of that for you. You don't have to keep flipping through your papers to try and figure it out. As you load your listings and people in, you can actually put the information in there. You can even do birthdays if you want on some of these. But the big thing is we like to refer back to when they either purchased and sometimes sold, and kind of similar reminder. It's interesting. We have Donna's first client that she sold in 1990. We still send it. He's in the same house, and every year I send him a card. I go, hey, just want to remind you, Dave and Holly, it's been 31 years since you bought that home. So
Do they refer you business?
they did once in a while, yes.
Yeah.
And they actually, so it's kind of funny because he goes, "We could send me that card." I know it's been 30 years. So the subtle overtone is, it's been so long, are you ready to sell?
Sure.
And a lot of times at the bottom of the note, if I write it, or I usually write most of them, I'll just say, listen, if you're looking to buy or sell or pick up, property, whatever I decide, give us a call. And send an extra card or two. So you figure after all that, he's got a card when you were with Smythe Kramer. So we try to update that. But I think it's very effective, and people do respond back and say, hey, thanks. Or, geez, I didn't realize it was 7 years already. I thought we just moved in. And it really is a good way to keep track and remind them. And we actually, try to get a little personal. How you doing? How's your daughter? How's Kim, or whatever the daughter's name is, and go from there. So we're real big on also sending out, if somebody gets married in the family. I hate to say, if somebody passes away, we like to, show our respects, a little sympathy card.
Do you do birthdays too?
On some we do.
Mhm.
We're a little remiss on that. Sometimes we don't get a birthday or they don't give it to us. And we don't do that, but we spend it on Facebook, which then leads down to your social media, which means Facebook is free. You can do that a lot. You can actually boost some of your listings or information by like $20. It'll get you out there a little bit more, but you want to be present on the social media, being Facebook, Instagram. We use Twitter. We don't use TikTok really. I don't think that's quite appropriate, but it's fun. But those are the things you can do for free, and it still keeps your name out there. And it basically keeps your people in contact. Of course, you have to friend all these people, but that's part of your marketing strategy, is to go ahead and keep making sure you get a hold of them. Any other social media you can think of? Well, we also use Canva, which is free, the basic Canva program. That's another free program to do marketing or flyers.
So user friendly, isn't it?
Yes.
It really is.
Mhm.
Great program.
Right.
Mhm.
So that's a good, so there are ways to do it and get marketing, get yourself out there outside than meeting people, handing out your cards, which is important.
Mhm.
Be in touch. We like to go out, we're going to take people to lunch. This is one of our things, is we probably try to once a week, if not every other week, call somebody that we know, we've done business with, and try and get to lunch with them. It's not always both of us. Donna may take somebody out or meet them. I may do that also. Sometimes we go together depending, but get a little more expensive to eat out, but still it's a deduction because it's a business meal. And my accountant keeps telling me I should be doing more of those because it's deductible. So don't be afraid to take somebody out and talk a little real estate and then take the receipt and use it as a write-off. So we do that quite a bit. So not a bad idea, and it's fun. So along with all that, to make it easier on yourself, you should use templates. Well, I'll go back to command. Once you get into command and you set your templates up, they're always there. So when we do handouts or flyers for our listings, basically you just have to change, the picture, maybe a little of the data, but your picture and the logos and everything are always there. So it's a good way to keep your templates in front of you, so you don't have to recreate the wheel every time you do a listing or work with a buyer.
kwconnect.com.
That's right, kwconnect.com.
Yeah.
Very good program. Ridge, I admit, when they first came out, it was kind of difficult to navigate and they had a lot of glitches. But right now we use it all the time, and it's a good way to keep in touch. We also do the neighborhood watch. And what you can do is once you put them in there, you can actually then program the neighborhood you want them to see, and they'll periodically receive updates of what's going on in their neighborhood. So now you're in front of them again as they receive this information. So, and part of that is if you go back, we used to call it 33 touch. I think it's 36 now maybe, but you want to touch your clients 33 to 36 times a year because it's repetition, and the more they see, of course, the more they remember you. So there are all the different ways. All these add up to maybe 3 times a month that you're going to actually be in contact with them, whether it's a just a note, you send them an anniversary update. We do postcards. We actually do the postcards for just listed, just sold type thing, which aren't that expensive either, which gets your name out also. If you need help with that, I think, we've been doing that for quite a few years, and I think they're very effective. So let us know. So templates are important. It saves you some time, especially if you're by yourself. If you have a team, of course, then you hand it off to whoever does your marketing for you. And like the last thing in, which is important, is to be consistent. If you're going to send out a postcard once every year, they're just not going to remember you. You've got to do something on a regular basis and keep it going. So some of the things Don and I have done, we've probably done for years, not just a couple of weeks or a couple of months. It continues to roll as part of our business expense to stay in front of the clients that we have, because most of our business that we do are from previous clients. And as you get older, now they're children. So, and sometimes grandparents, which we've had a few, and handle their estates. But if you're not in front of them, they forget. There's probably, everybody knows like 5 realtors at least. And sometimes we're flattered at the fact that we knew they knew some other realtor, but they did call us for various reasons. Hopefully reputation, precedes us in our experience. So that's how we do our business.
Use your reviews at all for marketing?
That's a good question. It was asked whether we use the reviews for our marketing, and yes, we do. Quite a bit, and it's nice to have a good review. I joke with people sometimes when we show them the reviews, they go, well, we just want to hand you about like 4 or 5 of our reviews. I said, actually, we have made some people happy. And of course, I didn't put the ones in that weren't, but at least you get somebody was happy with us. But yeah, the reviews I think are really important that these people can explain whether it's on a listing side or the seller buyer side.
What platform do you ask for them in? Google or?
Rate my agent.
Rate my agent?
Rate
Okay.
my agent, and then
Realtor.com or something? No?
they can, but I actually do rate my agent because then they send it out to all the social media for me, and
Cool.
it just goes automatic.
Cool.
Yep.
So important to ask for those, because people, a lot of times they want to do it and they just forget.
They don't, and they don't.
They're moving.
Yeah, you have to send them the link, and you have to do it, pretty quick, so
Yeah.
they get it. And
Yeah.
Yeah. Google is another good one, but it seems to be harder for them to.
So this basically is showing you what kind of revenue streams you can count on at this point. We know listings, buyers, referrals, and leasing sales. I'm going to refer back to page 177 MRA, just a short statement about the listings here. The two primary sources of income driving your GCI, the seller listing sales and the buyer sales. Of these two, seller listing income is by far the most important. Seller listings provide the greatest opportunity for net income. They are a marketing platform and a key source of leads. So again, we go back to list. Because that's basically where you're going to get most of your income, your best income. And you know that once you list a house, you're not running around like crazy. We have some buyers now that we've been showing for months, cannot find anything they like, too picky, prices are too high, whatever, there's all kinds of excuses. I like to say that the one husband of the buyer that we have likes to sabotage the house. So no matter what is good in it or bad, he finds one point and then he beats it up till he finally talks himself out of it. So buyers, they spend much more time with buyers. I think the rewards are much lower, even though once they buy, now they're a good source of, having a listing down the road, which we do get. But if you can get listings, once it's listed, you don't have quite that pressure, even though people want to sell it in 3 days now. But you still would have much more income streams from your listings than you do buyers. That's why Donna sends me out with the buyers. So she likes doing the listings.
Yeah.
So
do you have an expectation or plan for how many leads you might get out of a listing? Do you count on that?
I
Or
think
sometimes we get buyers sometimes.
the rule of thumb is probably maybe, well, if you get one, I guess we're happy.
Right.
2 would be great.
In our area, because they're so spaced out,
Mhm.
you're not going to get a lot of buyers.
Okay. Right.
So, and there was, it's coming back a little bit, but defer back to house calls just for a moment, that you could actually get the buyer leads, some of the house calls we used to do. I mean, house calls, wrong profession, the open houses. And, that kind of dried up the last couple of years versus it's coming back. Well, I don't think we ever really had quite that success on those. Though some people seem to pick up a lot of buyers off the open. Don and I really, as we got older, we're older, so we just don't really do them very often, if at all. And again, part of a security thing. I just don't like to be open to anybody. My opinion, or Donna's and I, if you like to do them, great. All I say, getting off a little bit, is to make sure you do it safely. That's a whole different topic, the safety of all that. Just read an article from the NAR, and it's basically talked about open houses and how, because of the way the economy is, more people are actually going to the open houses to basically see what they could rip off. And so the amount of thefts at open houses statistically is going up. So you're really gonna have to keep an eye on when you open it up to people like that. And again, I've always recommended, if you're gonna do it, have a second person with you. Do not do it alone, because you know what happens. They come in, it seems like 3 cars drive up at once. You can sit there for a half hour, nobody, and they all split up. So if you have at least somebody with you, you can kind of watch, somebody can go with them. One stays kind of put at your main, wherever you're going to stay, and kind of keep an eye on it that way and check your people in there. But, you may see that happening a little more and more because people need cash, can't pay for the gas. I got people complaining to me that to fill up their truck or their car is getting, $100 or more. So that's going to keep happening. So be aware. That's all I say.
I used to tell people when I did open houses or had buyers that the house, even if it didn't, I would say there's cameras throughout the house. So just, I'm obligated to let you know that. Just, just tell them that, and then maybe they'll mind their P's and Q's.
Whether it is or not.
Yeah, right.
I did want to touch on one part number. We don't do a lot of the rentals or leasing. Excuse me, but I want to talk about the referral sales. And I think as far as referrals, this is kind of a long lost art. But one of the reasons you also go to family reunion, other than we can learn so much, is to, basically network with everybody. So you come in contact with people from all over the country. So what better way to get some passive income is to refer people who are moving. And it seems like in Ohio, people want to move south anyway, right? So figure at that point, if you have the house listed and it sells, you have to ask the question, can I help you when you move to Sarasota, find you an agent down there? Most will say yes, or maybe they have somebody, but still, you got to ask the question because they either don't know that you can help them anywhere in the country. So what better way to get 25% check down the road is to get them to refer them to an agent in the area. So Donna's good at that. Again, I'm going to defer to her, but once we get that lead, Donna will make the calls or find the office, KW, of course, in the area and see if they can come up with somebody who looks like they would be a good match for somebody that's going down to wherever they're going.
I do call the agent and I ask them specific questions. I want to make sure that their likes are the same as my clients' likes and that they understand them. And there's been times where I've had to fire people and get a different. But I make sure that my client knows that I'm going to watch over them from up here. And it seems to work very well.
Yeah, nice little side basket of income, passive income.
Yep. So I think, so don't forget another way to make some about the profit share. There are ways to have passive income down the road for you. So
Also in command, you can search out the agents in the different area, read their bios, and then connect with them so that when you do have a referral to, let's say, Denver, Colorado, I go into command, I already have 3 people sitting there, and I'll choose the one that fits my client the best. So you need to use command.
And you need to have your profile updated, add your service areas and a bio.
good point. Yep.
Yeah.
If they have no bio, I don't even call them.
Right.
I go right to the bios and I read them. Don't count on the team leaders
Right.
because a lot of times they're trying to divvy it up amongst their ALC or different people in the area. So, I read the bios. Those are very important.
We just talked about that in the Rising Star Mastermind last night.
But
Good.
Yeah.
Yep.
Sorry.
Good point. No, you're fine. My last point as far as listings, again, if you go back to the book on page 102, he lists the many virtues of seller listings, of like the 6 of them. It's interesting because the first one he lists is you get to put your sign in the front yard. So still important, get that sign there, make sure your sign is up to date, pictures are up to date. So that, basically you're promoting yourself. So it's important to keep that up to date also. We talked a little bit about leveraging your business. A lot of types of leveraging. It doesn't have to be all physics, but as far as leveraging, if you get to that point, if you've done your leads, listings, you get to where now you're maxed out and you need help. This is where your first hire is probably going to be administrative assistant, somebody to help you take up the slack on the marketing, maybe some of the contractor close type things to do, and you build from there. There's an excellent couple of chapters in the book about that. We're not going to go into detail because you may not want to be the millionaire agent. You may want to just, do what you're doing. Not everybody does that. But if you want to go into further detail, read it through the MRE, I guess, or talk to people who actually are doing it, like our new OP, like Jose. They've done a great job with that. And I think, and that's what I was referring to. If you go through the 7-level concept, and that would be totally up to you, but we've dabbled with the 2nd level where we've had somebody help us administratively over the years, and then we kind of revert back to us too. But that was our choice. So that's one way. That's the model that they've come up with. These are models and systems that have been proven to work as far as making your business run smoothly or adequately. And I think it's one of these things that you can actually do to improve your business if that's what you so choose. And that's about it for me. Any questions?
No.